What we do at Polston Tax is we have both an accounting firm with accountants and tax assistants and tax planning, and we also have a law firm side that provides legal services, so representation with the IRS, with the state of Oklahoma, with states all across the nation, clients all around the world, and we help clients, individuals, and businesses that owe taxes or are in some kind of fight or need to negotiate with the IRS or the state or a state. And so in those situations, our clients don't have some simple situation or simple tax liability where they may owe $100 and they can write a check and send it in. It's typically tens of thousands or hundreds of thousands or millions of dollars that's owed. And they either can't pay it, they can't pay it in full, they have a struggling business, or are in some type of life circumstance that prevents them from being able to address that situation or the tax problem right now, such as a divorce or a death or a medical condition, and all sorts of variables with their business as well. And so we get in and we can help fight to help them with their tax problem, or for the clients who don't have tax problems specifically, we still help with their taxes with accounting and tax preparation and tax planning. So Polston Tax has been around for about 20 years, and in all of that time, we haven't explicitly said to our team members what our core values are. We have about 120 employees in 2 states at 5 offices, and we sent out a survey last year to see what qualities our employees believed would be the most important values that a person could have to be successful at our firm. What they didn't know was simultaneous to doing that survey on the firm and questions that we had for our employees about improving things, upper management worked together to develop what we thought were the 5 most important qualities that we wanted to pick as core values. And so individually we said what those qualities were, and we came together and found that our 3 lists were identical. And then we got the results of the survey back and found that our employees overwhelmingly, 120 employees that had the opportunity to take this survey overwhelmingly matched the 5 that we had picked. And so it was exciting to see that even though we hadn't explicitly said what our core values were at any point before, everybody described the same 5 core values. And so in that way, everybody really came up with these 5 themes of what was important to be successful at Polston Tax, and that was really neat. And we launched this week with official core values that we were going to start explaining and rolling out to anybody new that joined our team. And those are integrity, drive, adaptability, being a team player, and being compassionate. And you might not think of a law firm or an accounting firm having compassionate as one of their top 5 core values. Compassionate easily made our list because we have clients who are in such difficult positions for a number of reasons, and we just sincerely want to be in that gap with them. We want to hold their hands, we want to walk with them, we want them to know we can carry them through this process, and there's a light at the end of this dark tunnel, and we know how to get there. And so it requires everyone on our team to have a great deal of compassion and empathy for our clients, for their situations. And even if a client may be at their worst, we're still going to give them our best. I've been in accounting since I was 19, and I'm 40 now, so it's been a 21-year journey for myself through accounting and then law. And both of those have been fairly male-dominated. Accounting was less. Law is very much still male-dominated. I have not found that those have personally been barriers to entry. Maybe because I don't consider them barriers to entry. I'm more, if I find out there's a boys club, I'm gonna shove the door open. And I do think that it's an important topic to be cognizant of and to not be naive about, and that you always, in any situation, whether there's a gender bias or not, need to put your best foot forward. And I think that it's only when you're putting your best foot forward and know without question that your role or your upward mobility is merited, you could take the gender question off the table. And so that would be my advice to anybody. That's the approach I've taken, is to maximize my potential, to always be the best version of myself. And for me, it's never a question of gender, it's a question of, is upward mobility merited for me? And if it is, then I have always experienced that I've been appropriately moved up as well. The biggest mistake that I see with any business or any self-employed person is not recognizing the importance of being structured properly. A lot of businesses, they just start being a DBA. Just operate under your social security number, you're getting 1099s. That is going to put you in the very highest tax bracket. You're going to pay self-employment tax on all the income, every dollar that you earn. When I say highest tax bracket, that's a misleading statement in that tax brackets are based on the amount of money that you earned. But you're going to pay the most amount in taxes on all the income that you received, because it's all going to have a self-employment tax on it. But instead, if you set up an LLC and did an S-Corp election, you could move some of that money through to yourself as a salary, pay a payroll amount on that, a payroll tax on that salary, and then take the rest as distributions and not pay a self-employment tax on it. That's one good, easy example where you could cut the amount of taxes that you're paying by just one simple step of restructuring. And I understand when someone wants to start a business, they just want to go ahead and get started. They'll figure out the structuring on the back end. And so they'll open that business, they'll set up the LLC, and they won't consider what does it mean to have an S-Corp election, for example, or how could you be paying these individuals as 1099 or W-2 to take advantage of the tax changes or to minimize the tax burden that you have. And once you start building your business, you get into the hectic schedule of trying to get new clients or get new customers and do marketing and have inventory and find, bid on jobs and find employees. And so this myriad of things that you often don't have time to stop to do accounting or restructure. And I would say for any business owner, it's never too late to look at what your structure is and restructure and save money on taxes, even if someone's been in business 20 years. And it's a good question that you ask, specifically because tax law is constantly changing, and too many businesses get structured one way and then just stay that way forever. That may have been the best option that you had 20 years ago, but it's not the best option that you have today, and you're just throwing money away by not looking or not finding out how you could be structured better to save more money. Right now, after the tax law changes, this is the best time to maximize your savings on your taxes more than any time before. One good example of this is just a few decades ago, there were no LLCs, and so you could only have some kind of liability protection if you were willing to be a corporation. And it was only after the S-Corps and the LLCs were created that so many business owners were able to change from being self-employed 1099 DBAs to now LLCs and PLLCs and S-Corp elections and all of these different variances that were allowed, which was a huge tax savings for all of those people. And likewise, tax law just changed again, and business owners need to, even if it's March 2020, they need to find out what the changes are and change now so that they can have savings going forward. One of the most important changes that happen for small business owners and self-employed individuals is there was a change made to, it's called a Section 199A change, and the change that was made is for business owners to take a 20% deduction on their qualified business income. That means 20% of their income they do not have to pay taxes on. And there's a couple hurdles, because it's the IRS, nothing's easy. There's a couple hurdles to get qualified for that, from the type of income you have, the amount of income you have, and then the number of employees that you have, and what your credits might be or deductions might be, and what your, after the above the line deductions are taken, what your AGI and what that qualified business income amount is. But I would recommend anyone that is self-employed or is a business owner to get with a tax professional, because you don't want to pay 20% in taxes that you very well could be keeping in your pocket right now. When I say a 20% savings, I mean if it's $100, you can keep 20. If it's $100,000, you can keep $20,000. So why pay it if you're not required to anymore? It's prime time to do some tax planning and see if the new tax law changes apply to you. Right now, and when I say, right now is a great time to do some tax planning, is because I have worked with business owners for, like I said, 21 years now. I used to be an accountant before I became an attorney, and so I know what business owners' daily lives are like. Self-employed people are go, go, go from the start of the day to the end of the day, and it's hard to stop and get your documents together and figure out, what did I earn this month, or what did I earn this quarter, where's my business at? Well, everyone every year has to figure it out to file their tax return. So it is the best time to take what you're going to use anyway to get your tax return prepared, to also simultaneously say, here's all my stuff, tell me what I should do from a tax planning perspective, because it's more than likely now maybe the only time you're going to stop to put all those documents together, and you may not stop again until next year, and you don't want to get to next year and say, oh, I'm too far into the year to make any changes. Another thing business owners don't think about is if they're planning to sell their business. I would say that's another important time that they should have some tax planning done. Anytime you want to sell assets, maybe not even your entire business, but anytime you want to sell assets, you should look at how that could be structured, maybe across several years, to minimize the tax impact that's going to have. And the reason is $100,000 in 1 year is going to put you in a tax bracket for that year for all $100,000 in income. But instead, if you broke it out over multiple years, you're going to pay less in taxes over those multiple years. And maybe that's an income stream that you would rather have over those multiple years than a lump sum that you'll pay mostly in higher taxes than you need to. Same goes for inventory. I would say the same goes for married couples. Now with the 20% qualified business income deduction, we're finding that married couples actually can save by filing separately, which wasn't a possibility before because the married filing joint income tax bracket, you pay less dollar for dollar. But now if one of the individuals of the married couple has a business that qualifies, they may not pay 20% in income on that qualified business income. And so by separating, they'll save more money than filing jointly. So there's a lot of things that have changed recently that you should consider. We do this every day. Our tax team restructures clients all year round, even in December when the client is only going to have a month of benefit from it, and it can save tens of thousands to hundreds of thousands of dollars on just having your structure changed. You can go to our website, which is polstontax.com. We also have a chat feature that you can chat with us and get questions answered pretty quickly. We have video conferencing consultations now, so clients don't have to come in for appointments anymore. They can video conference with us, and directly from their phone or their computer, they can find out what options they may have. They don't even need to have web conferencing equipment. They can just click on a link on the internet and it'll take them to a video chat, and they can meet with us virtually from anywhere.